In this video, we will use our 5-step approach to do our technical analysis on Bitcoin's chart. We will analyze trend direction, volatility, trend momentum, patterns and support and resistance lines, and volume of trades. Hello everyone, welcome to the channel. This video is an update on price prediction for Bitcoin and the in-depth analysis that I have already done. So make sure to watch that if you've not. Before jumping into the analysis, a quick review of what happened. Price was not able to hold its position above the upper band of the channel, began decreasing at the confluence of the upper band of the channel and 65k line or the previous all-time high, where resistance became stronger. Then it broke multiple support lines to test the trend line just above the support box here at 42k. Now these support lines will convert to resistance. Now let's begin our 5-step technical analysis on monthly time frame. But before that, step 0. Step 0 is removing all possible biased ideas as much as we can. So we remove these lines to make it clear and less biased. Okay, if these lines are significant, we can find them again. Step 1 is trend direction. As you can remember from previous analysis, to analyze the trend direction, first we check the structure. The previous structure has not changed, and although the price is decreasing, it has confirmed the monthly upward trend to this point. We have this high here, a low, a higher high, a higher low, another higher high, and another higher low. So the structure tells us we are still in an upward trend. Next we check moving averages and they are still expanding towards up, so we still have an upward trend that has not become weaker despite the price decrease. The exponential moving average ribbon is not expanding upward but not contracting too, so not a significant change here. It just can tell us now that we are still in the same upward trend. Step 2 is volatility. To analyze the volatility, first we check the Bollinger Bands. The price was recently pushed down from the upper band but is higher than the midline, which is the narrowest moving average line here. This situation often indicates a sideways movement, especially when volume is not changing that much. Historically, on the monthly time frame, we used to see whenever price has had a correction after touching or staying above the upper band, it has decreased at least to the midline. Here and here. But in the previous correction, the price didn't touch the midline, so that may imply a stronger trend. Using the Keltner channel, we see that price was not able to hold its position above upper band. And historically, after that, we may see a retest of the midline. Here, here, almost, and almost touched here. So this indicator tells us we may have a lower probability of price increase, which is against smart volume pattern. To analyze the momentum, we check RSI. And as you can see, historically the overbought area for monthly time frame is higher than 80 and usually 95. But this time we got a rejection at the textbook 70% level and are currently at 59 approximately. So our usual next support will be the 50% level. And for a bullish movement, this resistance trend line should be broken in the RSI. But unfortunately we have a bearish sign here, a divergence. Price created a higher high recently, but RSI created a lower high. I don't like to talk about bad news, but that's a warning sign. SF4. Now we search for patterns and support and resistance lines. First we have a trend line here, a support line at 28k, a resistance line at 65k at previous all-time high, and another resistance at 69k at current all-time high. We also have this box here from almost 40k to 43k, which was a resistance and now converted to a support line. We also consider moving averages as support and resistance lines, but they are currently far from the price and under it, so they may act as support lines in the future. The EMA ribbon almost has the same condition. We also will pay attention to psychological levels, and the closest one to price currently are the 40k under the box and the 50k here, which is a local resistance too. The other way to find support and resistance is by using volume profile to find clusters of trading activity. And there are three clusters, one at 34k, the other one with the most volume at 48, and another one at almost 57. Drawing the Fibonacci retracement. We can see a bounce over 53k at 38%, testing the 59k or 60 almost at 23% as the resistance line, and also the golden pocket here as the support line. So now we should have an eye on the golden pocket at 42 to 44k as support, so we can extend our box a little. And the next immediate resistance will be at 48k, almost at 50% level, which is very close to the resistance level from volume profile, and this two line will be acting as resistance too. The triangle pattern on the monthly time frame, or the ascending wedge that we may hear about sometimes, may be a little biased. Checking the candlestick patterns here, we can see the engulfing pattern and the belt hold pattern were not effective that much. Right now the tweezer bottom here gives a little more weight to the last support of this chart. Step 5 is volume. Volume has not changed too much, so we don't have too much data here. To wrap it up, we are in a weak uptrend with a higher probability of sideways movement, but there is also a scary divergence between RSI and the price. So if a bearish scenario happens, price may test the trend line, and then the next support will be the golden pocket and our support box here at an area between 40k to 44k. The two other support lines at 78% of Fibonacci and 34k at trading cluster may not be strong enough to stop the downtrend if it happens, but some support at moving averages, the simple moving average and the exponential moving average, may be possible. So there may be a short opportunity from 40k to 30k if the risks are managed with a stop loss and take profit properly. But if the bullish scenario happens, the first resistance line will be the area around 48k, which is a trading cluster from volume profile, and also the 50% line of Fibonacci. The 50k level or our psychological resistance may be passed easier relatively, but the 53k level is important because it's both the 38% of the Fibonacci and a local resistance here. Then the most important one is this 23% of the Fibonacci, and at the same time the 60k level, which is the psychological level. And obviously after that, the previous all-time high at 65k, and the ultimate boss to defeat is the current all-time high at 69k. We should have an eye on the bottom line of the channel if we see a fast increase in price. So now we have some idea for our entry and exit levels, or take profit and stop loss, to manage our risk based on our personal risk tolerance, time frame and trading style. Now we will check the shorter time frames. Make sure to subscribe and hit the notification bell and all to be notified of upcoming videos.